In this video, I'm going to share you the few intraday trading things that you must avoid if you're a beginner in the market. I hope you all are familiar with intraday trading. Intraday trading is where you're basically buying and selling a stock or indices or any other instrument on the same day. This is quite popular form of trading because this offers you same day returns. So the first thing that you must be avoiding in intraday trading as a beginner is to stop taking trade at exact 9:15 a.m. Obviously, I have been a beginner. I know the beginner vibe. As a beginner, you have just explored intraday trading and you can't wait for the market to open. So what are you going to do? You're going to take an instant trade when the market opens, or within 1-2 minutes you're going to take a trade, and within upcoming 5 minutes you can't handle the volatility, and as a result you'll exit the trade. The market between 9:15 a.m. to 9:20 a.m. is super volatile. The first 5 minutes of the market is super volatile, and you can't just predict the market just based on one single candle if you are a beginner. It takes a lot of experience and expertise to take a trade at 9:15 a.m. It's been 3+ years in the market, and I personally never take a trade at 9:15 a.m. As a beginner, I used to take a trade at 9:15 a.m. but later on I realized that is not a wise strategy for me as a trader. I might take a trade at 9:15 a.m. very occasionally. For example, there is a news in the market that might make a market one directional, so on those occasions I'll be taking a trade at 9:15 a.m. So if you're a beginner, stop taking trade at 9:15 a.m. because the market is too volatile, and you can't manage your risk at the first 5 minutes because of the volatility, and you can't control your emotions as a beginner in the first 5 minutes of the market. And obviously you're going to get opportunities after 9:20, 9:25 or 9:30, but remember, the first 5 minutes of the market is not for you. Try to avoid taking trades between 9:15 a.m. to 9:20 a.m. And the second thing that the beginners do is neglecting the trend. So here you can see the market is in an uptrend. You can see the market is making higher highs and higher lows, higher highs and higher lows, and higher highs and higher lows, right? So in this occasion, what most of the traders tell to themselves is, okay, the market has made enough rally towards upside, so I might see a rejection from here and I might be planning a bearish side trade, right? So what you're going to do, you're going to take a trade against the trend. So if you're a beginner, then I would suggest you or recommend you to take a trade with the trend. So if the market is bullish, plan most of your trade on the bullish side, and if the market is bearish, plan most of your trade on the bearish side. So once you start getting the grip on the market and once you start understanding the market structure, then it is wise to take a trade against the trend. So if you're a beginner, try to be with the trend because trend is your friend. And the third thing that you must avoid, and the most the traders and the beginners do, is ignoring the stop loss orders. See, what most of the traders think is that they think stop loss order is the order that keeps them out of the market. But what I personally feel is stop loss order is the order that keeps me in the market. So if you are not placing a stop loss order, then obviously your capital is going to get wiped out and you are going to stay out of the market. The opportunities is always going to be in the market, but your capital won't. So stop loss order is the orders that actually keeps you in the market because it is saving your capital. So never ever ignore your stop loss order because that is what actually keeps you in the market. So these are the 3 important intraday trading things that you must avoid as a beginner in the market.